Um, Hello, everyone, and welcome to Accurate Pips. This is our first lesson of 2025 for the beginner course that we are going to be having from today. It's going to be about 7 to 8 lessons. They are all pre-recorded and uploaded to the YouTube channel for everyone to watch. After we complete the lessons, we will have one live session where I will meet you guys on Zoom, and we will have a question and answer session where everything that you've learned during the period of the pre-recorded lessons that have been uploaded to the channel, anything that you don't understand, you can write your questions down. You can either ask on the Telegram page, you can DM me via WhatsApp, or if you are on TikTok, we'll be posting snaps of the lessons on TikTok, Facebook, and Twitter as well. So you can do well. You can message me on any of these platforms. You can also message me via WhatsApp. All the links to my contacts are in the description of each of the videos, so you have access to every information that you need to contact me. With that being said, let's get into today's video. So since this is a beginner course, I have to do the story aspect first for the beginners to at least know a little about forex trading, where forex trader is, what the forex market entails, and all that. Okay, so first of all, welcome once again to Accurate Pips. Okay, to Accurate Pips. All right, so this Accurate Pip 101. Okay, since it is a beginner's course, so you call it Accurate Pips 101. All right, so the general thought for today is basics of trading. Okay, basics of trading. Now, under that, you look at what forex is. You look at the players of the forex market, the amount that is traded in the forex market on daily basis, on daily basis, and then also you look at the role that brokers play in trading. You also look at interest rates, news events, and also geopolitical effects that apply to the market, and the effects they have on market movements. So these are summary of the things that we will look at in this particular lessons. So first of all, what is forex? So let's start. What is forex trading? Or somebody will say foreign exchange trading. Okay, it's the same thing. All right, so let me give a quick definition of what forex trading is. So as you know, this is also a process, but this process involves two things. Okay, the process involves two things: buyers and sellers. All right, so forex trading or foreign exchange trading is the process of buying and selling currencies to make a profit. All right, so buyers will be doing the buying, and then sellers will be doing what? The selling. Okay, so that is what these two group of people that's in the market. All right. So Forex involves buyers and sellers. And what are they doing? They are buying and selling. Selling and buying what? They are buying and selling commodities, currencies, metals, metals like gold, silver, platinum, currencies like the US dollar, euros, yen. We have the oxy. Then when we talk about commodities, we are looking at cocoa. We are looking at coffee. We are looking at palm kernel, palm oil. You know, all those things are commodities. Then metals, as I said, we are looking at gold, silver, platinum, diamond, and all those stuffs. All right. All these are things that you can trade on the Forex market. Okay. They are all things that we trade on what? On the Forex market. All right. And these are not the only things. Okay. We have others like synthetics. Okay. Under synthetics, we have a lot of assets. Okay. We have boom, crash. We have the volatility pairs. Let me just write VO here. We have the jump pairs. We have the baskets. We have the range pairs. And so on and so forth. Okay. So we have all these pairs also under synthetics. All right. So we trade synthetics as well. Okay. So commodities and co are not the only things that we trade. All right. As we move on, I'll talk about how you get access to these instruments or to trade these instruments. Okay. So yeah, that is so the forex market is the process where we are buying and selling currencies, commodities, and so on and so forth to make a profit. Now, this forex market is the largest financial market in the world. Okay, it is the largest, bigger than the stock market, bigger than the crypto market. All right, it's bigger than all the market. The currency market is bigger than all the markets. Okay, so yeah, it is the biggest. And as I said, I've already set some examples that when we take the currency, we are looking at what? The US dollar, we are looking at the Japanese yen, we are looking at the Aussie, Australian dollar, we are looking at the euros, we are looking at the pounds, okay, and so on and so forth. There are many, all right? If you are in my country, Ghana, you are looking at the Ghana cedis. So we don't trade it on the standard brokers, all right? But then it's part of the currency system, okay? The rate at which you change dollar to cedis is part of the forex. We have the ZAR for my South African friends. We have the Naira for my Nigerian guys, and so on and so forth. Okay, we have a lot. The CFA is there, okay, and so on. A lot of what? Of the currencies are there, and we trade all of them. We do what? We trade all of them in the forex market. Now, one thing you have to know is this: the forex market, okay, is open 24/5. The synthetics, all right, is open 24/7. But the crypto market is open 24/7 as well. So the currency and the stock market are the only ones open 24/5. All right. So when you take the stock market and the currency market, we trade it from what? Monday to Friday, and then the market closes. All right. Then when you take the synthetic and the crypto market, we trade them Monday to Sunday. It's all round. All right. There is no break between them. Okay, let's make progress. Let's make progress. As I said, the Forex market is traded on 24/7. Sorry, 24 hours, 5 days. Now, there are a lot of factors that affect this Forex market. So, sorry about that. So, let's look at factors affecting the market. Okay, let's look at the factors that would affect the Forex market. Now, one of these factors that affect the Forex market is the economic news. The economic news. That is one. The second one is the interest rate. The third one is the geopolitics. Okay, so the geopolitical what? The geopolitical events that what happens, and I'll explain all this and give you examples of them. All right, I will explain. So these factors play major roles in the market. The economic news, the interest rate, the geopolitical events, and then also one that also we'll be looking at that one when we move further in the lesson. That has to do with the players in the market, the individuals. That has to do with our psychology, okay, and our human behaviors. All right, our sentiments. So we'll be looking at that also. Now, let me also let you know that these markets are traded by both retailers, banks, and institutions. All right. So we have those major players in the system, and they use what we call strategies. Okay. Some of them call it strategies. Some use pure chart, and then others use indicators. All right. No matter which of these three you are using, you are still going to what? To make profit on the market, as long as you understand what you are doing, okay? As long as you understand the concept. So mostly I refer to this entire thing here as the market concept. The concept. All right. I don't want to divide them into strategies, charts, indicators, and so on. I just want to refer them as market concepts, because at the end of the day, all these things came by as a result of a concept or a behavior or a structural makeup of the market, which we'll be looking at when we move on, because you'll be profiling the entire market. Okay, we'll be profiling what? The market. And we will see how the behavior of the market is linked to all these three: strategies, charts, indicators. All right, but before then, let me just explain a few things to you guys. All right, let me just explain a few things to you guys. Let's take, for instance, the economic news. The economic news. All right. Now, this event includes reports and data about a country's financial health. Okay, when we talk about the economic news, it refers to what? Data about what? A country's financial health. All right. So how is the country's financial sector doing? For instance, when we go to the US, when we take the USA for example, they normally release this report that talks about what? Jobs. We call it what? The NFP, non-farm payrolls. Non-farm payrolls. Okay, this is what? Release a news event, or is an economic event that is released by the US government. Okay, and it is released on every first Friday of the month. Every new month, the first Friday of every new month, this event is what? Is released. So that is for the US. For instance, when we take this country, what is their name? China. All right, let's take China for instance. China also normally give economic reports, but theirs is the GDP reports. And normally China's economy slows down. Okay, it slows down. Now, it is the GDP report that shows a decline in the weakened Chinese yuan. All right. So this data, that is their GDP report, shows that the Chinese yuan is weak. So this is an economic event. Based on that, traders are able to formulate their plans for the yen as to how they are going to trade with the yen. Now, for instance, let's go to the next factor, which is the interest rate. The interest rate. Okay. Now, when we take the interest rates, these are set by the central banks. Okay, the central banks are the one that sets interest rates. Let me put it this way: the central banks, they set out the interest rates. For instance, when we go to US, we call what's the name? We call them the Federal Reserve. Okay, the Federal Reserve. The Federal Reserve. Now, this is the body that determines whether they are cutting the interest rate or they are raising the interest rate in every month. And this event is reported during what we call the CPI. Okay, so as a beginner, once you master everything, you begin to hear about CPI news coming. Normally happens after NFP. Okay, it happens after NFP, where the Federal Reserve Chairman comes to announce whether they are maintaining interest rate, they are reducing interest rate by percentage point or not, or increasing interest rate and all those stuff. Okay, now, when this news goes out, it affects the dynamics of the market, affects the movement of the market, because a lot of players are going to use data from this announcement to determine the direction of the market. And for instance, in Ghana, the Bank of Ghana is the one that determines the interest rate. If you go to Nigeria, it is the Bank of Nigeria, or like their central bank, is the one that determines the interest rate. All right. Now, when you go to Europe like this, the interest rate is determined by the European Central Bank. Japan, the Bank of Japan cuts interest rates some time ago, and that weakened the Japanese yen. So during that period, players in the market use that information to make their decision against the yen. Now, the last factor we will look at is geopolitical events. Okay, how they affect all right. So now, how does this geopolitical event affect the market? For instance, these events create what we call political hot, instability, wars, trade disputes, elections, and based on that, there are a lot of uncertainties in the regions that are affected, and thereby it affects the currencies that are being used within those regions. And generally, if they are part of the major currencies that are being traded, then they tend out to affect almost the entire trading market. Okay. Now, when we take, for instance, recently we know Russia, uh, Russia and recently Russia and Ukraine. Okay, we know that they have been at war. Now, when you take Russia and Ukraine, for instance, that war affected the Russian ruble. Okay, the Russian ruble was affected by what? By that war, and it weakened drastically during that period, which made it to fall. Now, when this happened, the safe haven will now be the US dollar. So a lot of people will now begin to sell their rubies to buy the dollar, and thereby strengthening the odds, the dollar price, making it to what? To rise. So the exchange of now ruby to dollar begins to what? To go up. You get the point? Because there is what we call high demand. There will be high demand for the US dollar now. You get the point. Now, if you remember, there was this UK and Europe thing where UK wants to be on their own, which they call the Brexit. Okay, Britain exit from the European Union, Brexit. So when UK left the European Union that time, the British pound dropped in value. Why? Because during that period, there was a lot of uncertainty from investors, all right, about the strength, about how the British economy is going to perform. Therefore, a lot of people begin to think twice about going to make investments in the UK. Now, when that happened, the strength of the pounds decreased dramatically. Now, understanding these factors helps traders to predict movements and make better decisions. Okay, so now when we are done with all these stories that I'm telling you now, and you begin to now look at the charts and so on and so forth, and you begin to understand how things play out in the market, then we can now you can now begin to understand the importance of these geopolitical events, economic news, and the interest rates, and so on and so forth. Other unforeseen factors like natural disasters and all those stuff that can also cause tragic and can also cause panic in the system, thereby affecting the market price of the region that it is occurring. Okay, elections is another big factor. If you look at during the US election recently, Trump's win caused a lot of havoc in the currency market. So elections is also part of the geopolitical event. All right. Now, quickly, let's look at okay. Okay, let's look at who a forex trader is. All right, so that is the next subtopic. Let's look at, I wanted to talk about something, but I want to talk about this first. Let's look at who a forex trader is. A forex trader. Who is a forex trader? Okay, now a forex trader is a person or institution that buys and sells currencies to make profit. Traders analyze the market, they use concepts, strategies, indicators, and take advantage of price movements to earn money. Okay, so when you take the forex trader, you are looking at somebody who is either buying, so it's either a buyer or a seller in the currency market. And he does this by using what we call concepts, okay, market concepts, strategies, indicators, etc. All right. Aside those, we use what we call fundamental analysis, which was the economic events and I was talking about, sentimental analysis, and all those stuff to make analysis, and then we trade. Okay. Now, we have different types of traders. Okay, we have different types of traders. So after all this, at the end, you need to identify the type of what trader you are. Okay, so types of traders. You need to understand which type of trader after we've learned everything. So the first type of trader we have is the retail traders. Retail traders. That's number one. Now, who are the retail traders? Now, retail traders are individuals like you and I, okay, who trade the forex using online platforms that we refer to as what? Brokers. Okay, I'll talk about that. That we refer to as what? As brokers. So those are the first type of what? Of traders that we have. The second type of traders we have are referred to as institutional traders. Okay, institutional what? Traders. Now, these traders include the banks, hedge funds, financial institutions, other financial institutions like the pension funds and so on and so forth. Okay, they are what? Are the institutional traders, those big firms, the JP Morgan, the Bank of America, the Bank of Europe, and so on and so forth. All right, they are the big players in the game. All right, so they are the second group of what? Of traders, or the second types of traders we have. The third type of traders that we have is referred to as scalpers. Now, let me put this well. This, what I'm coming to now about is like subtype. So let me put it well. We have two major types of traders. Let me put it well. We have two major types of traders. That's retail traders and institutional traders. Then we have types of retail traders. Types of what? Retail traders. And these include one, scalpers. Scalpers. Now, who are scalpers? Scalpers are traders who make multiple quick trades for small profits. For them, even they can take a profit of 2 pips, 3 pips, 4 pips, 5 pips, 10 pips, and so on and so forth. Okay, all they need is they just want to see blue. They are gone. Blue, pa, blue, pa. Okay, they can hold loss for some time. Immediately it is blue, and they get the amount they are looking at. They are out of the market, and they take a lot of trades in a day. All right, they take a lot of trades. Now, this type of traders spend a lot of time on the screen. Okay, now the second type of retail traders we have are the day traders. Day traders. All right. Now, day traders are traders who open and close their trade within a single day. So if you take Monday, they open and close their trades within Monday. If you take Tuesday, they close and open their trades within Tuesday. If you take Thursday, any day you take, they make sure that the trade hasn't crossed over to the next day. Whether it has hit their target or not, all trades are closed same day. You get it? All trades are closed same day. Now, the third type of traders, okay, the third type of retail traders is the swing traders. The swing traders. Now, these guys are the ones who hold trades for days or weeks in order to catch large movements. Okay, so they can hold what? Trades for what? Days to what? Weeks. All right. Then the last group of people that we have, that is retail traders that we have, are the ones we refer to as positional traders. Positional traders. Okay. So these positional traders, what they do is this. Okay. They are able to hold trades for long. That is months and years. But you and me, why are we going to hold our trades for months and years? We want to do quick and go. So these are people who hold trades for months to as much as what? Years. Okay. So they are the long-term traders. Okay? They hold trades longer than the swing traders. Okay. Now, as a forex trader, you need knowledge, discipline, and a strategy in order to what? To succeed. So keep that in mind. Okay. I say you need what? One, knowledge. Two, you need discipline. You need to be disciplined. Three, you need a strategy or concept. Okay. You need these 3 things. When you have these 3 things, then you add the fourth one, consistency. Everything you do, if you are not consistent, you can't succeed. So when you add consistency, then you can now succeed. Okay. You can now what? Succeed. So yeah, those are the things you need in order to what? To succeed. These 3 things as a forex trader: the knowledge, the discipline, the strategy, and the consistency. Okay, consistency involves a lot. Practice, screen time, and all those stuffs. All right. Okay. So let's move to I think the last part. Yeah, the last part. One thing. Okay. Or the last thing. Let me put it like that. So that is let's first look at, okay, first, let's look at how much is traded on the forex market per day. Okay, as at the end of 2024, okay, we are into February of 2025. The statistics for 2025 is not out yet, but by the close of 2024, December, the statistics shows that, okay, approximately 7.5 trillion dollars is traded in the market per day. Okay, that's how much passes through the market every day. So what you and I are gaining or losing in the market is just a fraction of a fraction of a fraction. All right, that we are losing in the market. And if we win, it's the same fraction of a fraction of a fraction that you are winning in the market. All right, because tons and tons of money passes through this market on a daily basis. Now, let's break down a few things. When you take this volume that I've given you right now, okay, the major currency pairs, which we'll be looking at very soon, okay, we have three types of the pairs: the major currency pairs, the cross pairs or the minor pairs, and then the exotic pairs. Now, the major pairs account for the most trading volume or the most money traded in the market on daily basis, because big players are looking at these major currencies. They are trading in these major currencies like the euro, the dollar, the pounds, the Japanese yen. These are the major players in the industry, and the central banks, the hedge funds, the corporations are all interested in it, as well as the retail traders. So this gives us the highest amount of volume in the market. All right. And the landing session also has the highest number of volume, followed by the New York session. Okay, so landing session, New York session, before the Asian session, okay, Asia and Tokyo. All right, then London and Frankfurt. Okay, these two combined gives us the highest volume traded, followed by New York and then Asia and Tokyo. All right, so these are the odds, are the constitutes of this $7.5 trillion that is being traded in the market on daily basis. This huge daily volume makes a forex market highly liquid. Okay. Now, when I say highly liquid, what I'm trying to say is that it means as a trader, you can buy and you can sell the currencies quickly without any major price fluctuations. This is why people concentrate on the major pairs. A lot of people. Okay. People rarely or barely concentrate on the minor pairs and especially the exotic pairs, because they have really small amount of volume or liquidity injected in the market on daily basis. So now let's look at the types. Let's look at our final chapter for this particular lesson. Let's look at the types of currencies. Okay, sorry about my handwriting here. Let's look at the types of currencies. We have three types: the major currency pairs, we have the minor. Okay, so first let me talk about the major before we go to the minor ones. All right, so when we take the major pairs, when we take the major pairs, we are looking at the euro. Okay, so euro paired with the United States dollar. Now, this pair is the most traded. Let me state that first. the Euro USD is the most traded pair in the financial market. Then the next most traded pair is the GBP and the US dollar. Now, this is sometimes referred to as the cable. Okay, it's nicknamed as the cable. Now, the next highly liquid pair that I love so much is the USD JPY pair. Okay, USD JPY pair. It is really, really highly liquid. Okay, it's highly liquid. I won't lie to you. I love it. Then we also have the USD and CHF, which most people see as the safe haven. Let me put it that way. A lot of people see that it moves in a kind of moderate manner. So a lot of people see it as what a safe, let me say heaven. I think hyphen, yeah. A safe haven. Now, this is highly liquid. That is USD JPY. Okay. Then we have the Aussie dollar. Okay. The AUD USD pair. The Aussie dollar. All right. That is the Australian dollar against the US dollar. Then we have the US dollar. You have the US dollar against the Canadian dollar. We also have the NZD Zealand dollar against the United States dollar. Now, you can see US dollar everywhere, because it is what? It is the standard. Okay, it is the standard for trading, for global hot trades. All right. So everywhere you can see US dollar all over when it comes to the major currencies. Okay, so these are the major currencies. So keep it in mind. These are all the major currencies. When you are trading, when you start your trading journey, you will be making use of this knowledge about major currencies and so on, and how you can, you can use them in your daily trading. Okay, all right. Let's look at the minor. I will not talk much on the minor and the exotics. Okay, the minors are also referred to as what? Cross pairs. The minors are also referred to as cross pairs. So I'll just give you examples. Quick definition. These currency pairs do not include the United States dollar. So you see, because they don't involve the dollar, they are referred to as what? As the minor pairs. Okay. But then they still carry some amount of what? Moderate amount of what? Liquidity in the market. That's why they are referred to as not just the absence of the US dollar, but because they are also carrying some moderate amount of what? Liquidity in the market. For instance, we take the euro pair and the pounds. Okay, we have the euro. We have the euro and the Australian dollar. These are major countries. Okay, we have the pounds against the yen, and these are currencies of what? The major countries. You get it? Then we also have the Aussie and the yen. I think CHF. Yeah, I nearly forgot one of my pairs. CHF and yen. Okay, we have a lot of them, but these are the most traded by most of the traders. Most of the most traded minor pairs by traders are these ones that I've listed for you. Now let's look at the exotic pairs. Okay, let's look at the exotic pairs. Exotic, okay? Exotic pairs. Now, how do I put it? These pairs, okay, they behave in two ways. One, they have low liquidity, but high volatility. Okay, so they have low liquidity, but they have what? High volatility. So those pairs are very unpredictable. The exotic pairs are very, very unpredictable. Now, some of them are combined with the what? With the United States dollar, and some of them are also combined with other major pairs. Okay, so it's a mixture of them and dollar, and then also the other well-recognized pairs. So, for instance, if we take ZAR, the South African currency, you see that we have USD, ZAR being traded. We have the USD and the Turkish it's lira also, yeah, I think lira. So USD TRY, yeah, that should be it. We have USD SGD, that is the Singapore their dollar. We also have USD Naira, yeah, I can't forget my Nigeria friends. We also have GBP MXN, that is the Mexican peso. Okay, so these are just few. There are many, but these are just few. Because of time, I can't go into all of them. All right. A quick one. Let me talk about this because I don't want to talk about it in the next lesson. So I don't want to take it to the next lesson. So let me just quickly talk about this. Okay. How does retail traders, okay, how do we have access to the forex market? Okay, so when we take retail traders, how do we access the market? So we access the market through an online platform we call broker. Okay, now who are these brokers? These brokers, they are firms, okay, that provide online trading platforms that connect with the retail traders to the global currency market. Okay, now the reason being that we retail traders, we don't have direct access to the large interbank markets. Are you getting the point? So the only way we can access it is for these brokers to act as intermediates. Okay, so these people are the ones now taking our orders and then sending it to the global hot intermarket, the global interbank market for our orders to be what? To be triggered. Okay, so this is how retail traders, we get access to the forex platform. So we have a lot of brokers, but for the purposes of this course, so we have what we call brokers. We have brokers, and then we have prop firms. Now, prop firms, they provide you with cash. You use more money to buy huge sums of cash, and then either you trade challenges to now qualify for a live simulated account, or some of them also have live simulated accounts you can buy directly and trade and make profit. And then some of them have 10-90 profit share, some have 20-80, some have 30-70. Okay, yeah, so we'll be looking at all of them. All right, so brokers, that one you deposit your own money with them and then you use it to trade, you make profit, and then you withdraw your profit. Now you'll be using 3 major brokers with our training. One will be specifically for synthetics. The other 2 will be for, okay, one will be for currency, Forex currency, and the other one might be for prop firm. It is a broker, but it also gives prop firms. I use it. I've received payouts from there. So we'll be using those 3. All of them, I'll leave the link to the platforms in the description of these lessons, all the lessons. Okay. Now, when you create the account and you are done, they'll ask you to verify your details. So you need to use your actual details, your personal details. You need to use the right ones, your full name as it is on your ID or passport, your address as it is on your bank statement, the address on your bank statement, because they'll be asking you to prove your identity and your address using your bank statement or utility bills. Okay. Then when you are done, you can fund your account through bank, Momo, debit card, crypto, and so on. Now, the platforms that we use for trading, there are many, but the 4 major or 3 major ones, okay, let me make it 4. The 4 major ones we'll be looking at the most will be MT, 5, and 4. Yeah, so let me make it 3 major ones: MT, 5, and 4, C Trader, and trading view. Okay, so this will be the major platforms I'll be using. Now, for news trading, I'll be giving you, as we get to those, when we begin to go deeper, I'll give you the sites that you use for what? The economic news, the interest rate, and so on and so forth, that you use to be able to what? To get details and information about what is going to be happening in the market. Okay, guys, so this is where we are going to end today's lesson. I'm going to be cutting some of the parts short, and I'll put them on Instagram, on TikTok and Facebook. So some of you that don't want to watch the full this thing on YouTube, you can, but just that those ones will take time because I'll be cutting them small, so I can't post all of them. But if you want to watch everything, try and watch it on YouTube, and then you understand everything that I have taught. So another lesson will be out tomorrow. So every day there will be a lesson. So we finish the 6 to 7 or 8 lessons that we have. After that, we have a live session with you. Maybe the only day that there will not be any lesson might be Sunday. Okay, but if I do the recording before that time, the lesson will be out before maybe I go to church in the evening. All right. So yeah, thank you all for attending the meeting. For watching the lesson. Anything you want, my contacts are in the description of the video. Thank you.